today it's our Australia Day special. Hello again, it's Martin North from Digital Finance Analytics, web notice post covering finance and property news. And it's very pleasing to see that Tarric is happy to come on even on Australia Day. Hi Tarric, how are you going?
Yeah, I'm good, mate. Happy to be here as always.
Plenty to talk about. I always say, we are never short of things to talk about. And the last couple of weeks have been, actually pretty crazy, haven't they?
Well, on the domestic front, there's the issues with the stage 3 tax cuts, which have, set off a storm of controversy. And, abroad, the issues in the Red Sea still continue. And then there's, the anticipation of rate cuts in Europe, in Australia, and in the US, but also the possibility of some sticky inflation if we go by some of the data that we've seen, in Australia and around the world.
Yeah, well, in reverse order, I thought it was very interesting because the Bank of Canada came out yesterday with their reporting and monetary policy, and basically Macklem said that we need to keep rates where they are, and there's no expectations that we are going to be able to cut rates anytime soon. We've got to wait and see. So he's talking later in the year. Possibility if inflation continues to be sticky, we might have to go a little higher. So that was very interesting, and I think actually it's the first time that for this year, I think a central bank's come out and said what they said, and to me that's quite significant. I think again the market is somewhat disconnected, I think, from what central bankers are saying. And I don't know who's right. The markets are still saying, "Oh, cut." But we will know, early in the new month on the Tuesday a meeting at the RBA, and we've got the Federal Reserve. The ECB is going to come out with something quite soon, and of course the Bank of England too. So it's raining central bankitis. And on the tax cuts, I made a show yesterday calling about a spot in the ocean, because actually all of this noise and fury, right? The changes are not actually that dramatic, and it's not tax reform.
Look, I mean, I think that if you look at a graph of the impact on people by a percentage of income, on paper, yes, this is arguably a fairer way to do things, but there is the issue of it being a broken promise, which is obviously a rather loaded issue. But then there's also the fact that a lot of these tax brackets haven't been changed in well over a decade. Yeah. I mean, there's a lot of discussion about the top tax bracket not being changed since the late 2000s, and absolutely, that's the case. But it's also equally true that it's been 12 years since they changed the tax-free threshold. So there is a bunch of people today now paying tax who otherwise wouldn't have, because of bracket creep at the bottom end as well. So that's all. It's a factor across the entire range. And if we want to talk full proper tax reform, then let's do it. Let's have a proper conversation about getting that under control. But I also think that we also need to have a conversation about how we're going to fix the issues with spending. Because if we do have an issue, if we do have a conversation about tax reform, and we do get bracket creep in line where it was even, say, a decade ago, that's a lot less tax that Australians are going to be paying. And it also means that the federal government's going to have a whole lot less revenue. And, well, unless we want enormous deficits, as far as the eye can see, there's going to need to be some spending cuts somewhere. And those tend to be rather unpopular, whether it's with the public, who usually, let's be honest, end up getting the short end of the stick, or the public service, who will, as you like to say, Martin, turkeys don't vote for Christmas.
No, indeed. And it is worth just underscoring that point about the way that the tax system works. This quiet ratcheting up of the tax take without actually the government having to do anything is intrinsically built into the system, because the tax brackets aren't inflation protected. And if you look at the total tax take now compared with previously, it's an all-time high. And so what is true is that the amount of tax being sucked out of the system from ordinary households has never been higher. At the same time, of course, the tax take from corporates has never been lower. So we have a fundamental structural problem inside the way that the tax system works, with corporates exerting their power and influence on government much more than ordinary households who don't seem to be able to do much about it, in the backcloth of spending more and actually also spending on probably on the wrong things too. So these are political dynamite issues. So we sidle away from that and just sort of mess around the edge, and then create sound and fury about the opposition saying, "Oh, you've got a promise," and Albo saying, "Well, it's a more just approach, and 11 million people are going to actually benefit." Well, that's probably true, but the benefits are relatively small. And in the scheme of things, it's like angels on the head of a pin. It's not really tackling the fundamental structural issues that you mentioned.
Well, I think that you look at the issue more broadly, right? This even at the CPI rate at which rents are increasing, most households will see their tax cut evaporate. Most renting households will see their tax cut evaporate on purely from the rise in the increase in cost in rent. Now maybe at the top end, in certain areas where there's not as much demand for rental properties, and there's not that sort of outsized rental crisis driven demand, perhaps. But at the average, at the median, people are going to get smacked a lot harder by rental inflation and inflation in the other essentials than they are going to benefit from these tax cuts. And I think that is something that's quite important. And there are a few politicians, Keith Woolahan, the LNP member down in Melbourne somewhere. He was on Sky earlier, and he was basically saying that this needs to be assessed in a broader way. And we need to be looking at this as a whole broader issue. And he's right. And it's nice to hear someone say that. Admittedly, it's a backbencher, but it's nice to hear that from Canberra, period, because that's what we need. We need more people. I mean, Jackie Lambie was another one who basically said that we need to more broadly reassess these issues. And I think that's really just the crux of the issue here, that we're tinkering around the edges when really what's needed is major structural reform. If we are going to fix bracket creep, if we are going to fix the issues that we're going to have as a result of changing demographics, as a result of needing all this additional infrastructure because of the significantly higher than expected rate of migration, all these things need to be considered and acted upon. But the problem is that our politicians are generally not too bright, and they limit themselves with these promises and these commitments that they make, when in reality what they need to be saying is, we will be nimble. We will, these are our core values, but this is how we're going to execute those values. And it's going to depend on the circumstances, because it's stupid, this idea that we should just go, oh, well, this is what trend migration looks like. This is what the trend rate of migration should look like. And it's like, well, isn't returning to that trend a rather silly idea when we can't build enough houses for all the people, and we lack the necessary infrastructure for those people? Now, you can make all sorts of arguments as to the sort of economic benefits, but I think we also need to examine things from the social side as well.
I absolutely agree with you there. And it's interesting, did you see that Trudeau has actually turned down the student migration dial in Canada, right? Having had more than a million coming into the country there. And there were some very interesting conversations about, bringing all these people in the country and giving them degrees that they then can't use, so they end up sitting in Ubers, which I thought was quite an interesting observation. That's literally discussion in Canada the last 2 or 3 days. And coming back to this tax conversation, it's worth remembering, of course, that 2 in 5 households pay no tax at all. 2 in 5, right? So whatever tax benefits have been created by the changes in the tax, it doesn't hit 2 in 5. And of course, that 2 in 5, a lot of those are actually in the rental sector. So there's no tax relief for those.
Yeah, I think that rents are really going to be the elephant in the room for the foreseeable future, because we aren't going to be able to build enough houses. And I mean, to put a number to it, NAB recently came out with a paper, and they concluded that the current housing deficit, and this is obviously back in 2023, but the current housing deficit back in 2023 was about 120,000 homes. Now, at the current rate of population growth, we need to add, and this is in net terms, not in terms of dwelling completions, because there's issues with knockdown rebuilds, etc., redevelopments. We need 250,000 new homes a year to be added to dwelling stock to maintain where we are now. And that's not improving the issue, that's not, eating into the 120,000 home deficit that we already have. So, you're talking about years and years and years and years before we can catch up with this, unless we see either a huge, huge drop in migration to below pre-COVID levels, or we see a huge ramp up in housing construction to above pre-COVID levels. And I don't see either of those things happening.
Well, we don't have the capacity to build that size of quantum of property. And the other point, of course, is that the inability to get building and construction workers and materials, and we'll touch on that in the context of the shipping issues in a second, means that it's harder to complete. So, in fact, the number of completions are significantly down from where they were. Plus, of course, we've still got all of these high-rise defect issues. And, in recent times, we've heard more stories, not only in New South Wales, but a lot of it's in the Sydney region, where, in fact, the quality of construction is very poor. So we've got some major structural issues, literally and metaphorically, right?
Some data-driven humor right there. No, it's really quite a mess, because there are a lot of people who really, if they want to stay in the areas that they're in, apartment living is the only option. And in a lot of cases, buying a relatively new apartment or off the plan is the limited basket of options that they have. And I just find it kind of absurd that we've got this situation where we're running this enormous migration program. We know we need all these new homes. We know that they're all we know that a sizable proportion are being built poorly to the point of there being, I think what was the New South Wales Building Commissioner recently said, about 40% of new ones had major defects, and I quote, major defects.
Yeah.
So I mean, you're basically looking at an issue where if you're one of those people who's being forced into buying, if you want to stay in a certain area, it's not far off a coin flip whether or not your apartment is going to have a major defect. And that is just, I mean, that shouldn't be allowed. That shouldn't be allowed to happen. That should be like number one, maybe not number one, but it should be well up at the top of the list of priorities for the state and federal government to stop. But this is Australia. And I don't actually think I need to add to that. I think that pretty much just tells the tale in and of itself.
So my analogy is Russian roulette. So if you are a prospective purchaser of a new high-rise, or if you're living in a new high-rise or relatively new high-rise at the moment, you could well be playing Russian roulette. You've no idea, because it's very hard to actually tell from the outside looking in whether the building and construction has been done right. The certification processes are pretty much bust still. And even Chandler admits that there are many examples where he doesn't know whether there are problems or not, but he thinks there probably is. So this is a huge issue. And yet, there's sort of messing around the edge. But again, it's another classic example of, if you were serious about really wanting to tackle this, you'd do it differently from what you are doing. What you are doing is being seen to be doing some stuff. And, I come back, this is a great Australian disease, isn't it? As long as you're seen to be doing something, then they can say, well, we're doing something. But actually, it doesn't necessarily mean it's the right thing.
Well, I mean, it's like the old Lucky Country quote, it's been turned into a positive moniker, but it was originally intended in a derogatory way, in the sense that basically, to paraphrase, the Australian people are generally, intelligent and adaptable, but the leaders are generally poor and second rate and surprised by pretty much everything. And I mean, that quote was written a long, long time ago, and I would say that the caliber of leaders in Australia has come down even further since then. And the problem is that we've got all these major issues, whether it's building codes, tax reform, migration, infrastructure, you name it, state, federal, whatever. And there just isn't the appetite to fix them. There isn't the appetite to adequately fix them.
Yeah.
And I think part of the problem is that I can only imagine the untold hundreds and hundreds of billions of dollars, maybe trillions, I don't know. But the chances are it's a lot that it would cost in order to fix these issues. I was just going through, for example, I was just going through a Treasury paper on migration recently, and on the net impact and cost of migration through all the different avenues, and one of the ones was infrastructure. So I went and found some data on how much hospitals cost, how much hospital beds cost. And depending on the hospital, the ones that I found that were built most recently were somewhere between $3 million and $4.7 million per bed. Now, Australia has about 2.5 beds per 1,000 people. So if we do some rather basic math, we end up with a number of about $7,500 per person that we have to pay to build more hospitals to stay where we are. And if you multiply that by the amount that the population has grown, all of a sudden you have a bill that's over $4 billion. And that's a lot of money. And that's just to tread water. And it's just really a bit of a mess that we don't have a broader fact and stat focused system through, I should say fact and outcome focused lens through which we can view these issues, assess them in a quantifiable, concrete way, and say, can we run migration at this level? What do we need to run migration at this level? And if we are, what do we need to build in order to maintain the quality of life for the people who already live here? But also, one of the most important things as well is to ensure that the quality of life for newly arrived migrants is good. Because oftentimes the people who suffer the most are these migrants and are these people in these high growth areas where, unfortunately, too often they end up with subpar government services like healthcare.
It sounds like joined up thinking. Goodness me, you can't have that. That's politically unattainable. The thing that I always think about is, it's like playing a game of consequences, right? So the consequences of this is the consequences of this, you follow it through and you can see that no one's done that. So it's a finger in the dike time. They sort of do a little bit of a political fix here and then a bit of a political fix there. And then they say, well, we're doing something. But structurally, there's no linkage between the various elements. And therefore, you never end up where you want to end up. And in fact, quite often you end up going completely the wrong direction relative to where you if you were serious about fixing this, you'd do something different. So that's the first point. The second point is, of course, it's all about the political cycle. And going back to the tax cuts, I'm, quite amused at one level, but also quite distressed at another level as to how the different sides of politics are playing this at the moment, But the critical issues that you've touched on and, we've explored in previous shows really aren't being addressed. And it makes it very hard at the next election because both sides of politics are, they're on the same side of the street, aren't they, really?
Honestly, it's been kind of hard for a while. Like I get my ballot paper in front of me and I just go, wow, now what do I do? Because like none of the options are very appealing. I mean, I usually just give, I usually just go, well, I usually just, do my research and just see who's the best local independent, or local minor party who's willing to, talk the talk. I mean, maybe they won't walk the walk, but I'll at least give them a shot. I mean, I know they're probably 99.9% chance they're not going to win anyway, but yeah, no, it's just such a disjointed system, which from an empirical perspective makes no sense. Like if you are a government or if you are an organization managing something, you want data, you want quantifiable, concrete metrics, by which you can then guide policy. But as they say in politics, never ask a question unless you're already sure of what the answer is going to be.
Well, I would argue, I've seen it so often, both in the public and the private sector, people actually don't want the data, they don't want the truth because they can't stand the truth.
Well, exactly. I mean, what's that quote? It's like never rely on someone understanding something if their job relies on them not understanding it.
Yeah.
So yeah, unfortunately, that's just the state of affairs. And I think part of the problem is that to be completely frank, is the fact that is acceptable.
Yeah.
The public gets pissed off about something every now and then, but there is no cohesive movement to push back against that, except just people saying in the polls, well, I'm pissed off about healthcare or this or that. And I mean, I remember watching the exit polling on election night a couple of years ago, federal election. And I mean, in amongst the coverage on Channel 9, which was not fantastic, but there was, basically people were saying, well, I have issues with healthcare, I have issues with education, I have issues with congestion, I have issues with blah, 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 blah. And it's just like, well, all of those things are linked to insufficient infrastructure and services growth, which is linked to the rate of migration not being adequately reflected by those services. And I just, mind you, I mean, to be completely fair, they're having this argument in Canada on steroids because their immigration intake per capita is probably roughly double ours. So, although I will say at least Trudeau won't have to deal with a recession because the population is just going up so quickly. You'd have to have one of the deepest per capita recessions in decades.
Yeah, well, it's interesting. Their statement of monetary policy included very significant drops in per capita GDP growth over the next couple of years. So, even they're signaling that this is a problem. My mental image is political lemmings, right? They run from one area to another area to another area to another area. They all sort of are chasing each other's tails, as it were. But there's no top down. Hang on a moment. There's a big picture here that's really important, and it's all connected. And let's try and put the connections together. And as you say, it's don't be influenced by the data. That's the last thing. I know what we want to do is we'll just leave it to the central bank. They'll solve it for us, won't they?
Oh yeah, we just turn up immigration till 11, go down the pub, and just let the RBA deal with it. Yeah. I gotta say it is kind of. I mean, look, when I used to work on covering US politics, I used to just sit back, and just go, wow. And at that point, you just get the popcorn out and you just watch it all unfold. Because it's not your problem.
Yeah.
But the problem with this is it is our problem, and as much as sometimes I just want to pull the popcorn out and just go and just watch it all unfold, it's just. It's hard, it's hard because I feel like people, the average Australian, the man or woman in the street is being asked to sacrifice and to pay to support this current system that doesn't support them.
Yep. No, absolutely. I agree with that. And that's, it's not just Australia, by the way. It's the same in the UK and same in other places too. The quality of the politicians, their ability to be able to, deflect and argue on other bases rather than actually the truth is also part of the problem too. And I guess the question is, is there a way out? Well, there is a way out, but it's like the old adage: if I was going to go over there, I wouldn't start from here. I'd start from a different place. So that's really the problem. And maybe on 26th of January, it's timely to just stand back and say, just a moment, what are we trying to achieve? Where are we trying to go? What's the sort of society do we want, and what we need to do to get there? And I don't think the answer is flooding society with yet more people that we can't house, that we are spending too little on essential services. And in the meantime, of course, the international gas price remains extremely high, which means that our energy costs are extremely high because they've stuffed up that too.
Yeah, it's a rather frustrating state of affairs. And I think the thing is that, like, okay, my apologies if this goes a little long, but I will try and keep it brief. part of ultimately, society needs to be run for everyone. You know, I grew up in a low socioeconomic area of Melbourne, and I grew up around people. Their parents were sheet metal workers. They were welders. They were factory workers. They were they mowed lawns. The whatever. You know, people with just regular everyday jobs, not the highest paying jobs in the world by any stretch of the imagination. A lot of them below the median. But in the past, they had a shot. They had a shot at a life. They could buy a house. They could raise a family. Things were not easy by any stretch of the imagination. I think that really needs to be emphasized. This isn't looking back with rose-colored glasses. Things were still hard. Don't get me wrong, but they had a shot at that life. They had the wages growth. They had the fact that that housing prices weren't completely out of control. They had that shot at a life, at an Australian life, at having the full Burke's Backyard theme song with the quarter acre block and everything that come along with it. But that's not the same anymore. That forklift driver or that sheet metal worker is now being told to pick up sticks and go to wherever they can afford. And at this point, that for people on below median incomes, particularly on single below median incomes, for whatever reason, whether that the person's staying home with the kids or one of the kids has a potential issue or whatever, that's life. We can't all have double incomes and stuff like that. I mean, some of us are blessed to have that, and we're very thankful for that, but not everyone does. And life and society has to be ready for the people who have those sets of circumstances. And previously, it was. And those people could. I mean, I know a guy who was a single father of 5, who on a factory worker's wage bought a home and improved that home. And he remains to this day one of the best people I've ever known. And people like that, they don't have that shot anymore. And that's sad. And that's a profound failing of our society. And I think on this Australia Day, we should be talking about what Australia is all about. What sort of Australia do we want? Do we want an Australia where you have to have a double income to afford a home? Or do we want to have an Australia where people, even on a single income, on a below median income, people who are the lifeblood of the actual functioning of our society, can still afford a desirable, comfortable life? It's not going to be the most flashy thing in the world. It's going to be somewhat basic, but that's life. And I think they deserve a shot.
Yeah, absolutely. I absolutely agree with you on that, Tarric. And, just to sort of bring that point home, I was astonished when CBA published their most recent housing affordability analysis. And it showed that it was really shot. But they also assumed 2 full incomes per household as the base measure on which they measured housing affordability. So they showed housing affordability was shot on 2 average incomes. And as you say, not everybody has 2 average incomes. I see that in my surveys. So we've come so far off where we were in terms of affordability and to be able to just get a life, that it makes it really difficult for a large proportion of the population. And the politicians have done this. So this isn't just a happenstance. This is based on bad policy over the last 20 to 30 years. And there's no real appetite from our current politicians to recognize they've stuffed up, and 2, that there's actually an alternative path. So that's my little rant here as well. This is deliberate. This isn't just an accident. It's deliberate.
Well, I mean, even if you take the most forgiving position possible, that this is all just an act of utter incompetence, and there's nothing malicious about it. It's just people being really, really, really stupid over a very long period of time, and just multiple people just being, who are generally immensely intelligent, just being really dumb. Let's just hypothetically say that. Wouldn't you just, in the now, assess things and go, okay, we're talking about basic shelter. We're talking about something that multiple Senate committees have considered, and as I'm talking about home ownership, have considered the basis of community. Things that people like Robert Menzies talked about as like the basis of self, of mental health, of all these different things. You know, the quiet little piece of land that's our own that we can retreat to and be ourselves in and just, you know, watch the world go by. You know, these are Liberal Party values, yet they are not represented by the Liberal Party or the Labor Party or by you know, any of the big parties. And it's a bit sad. You know, what's more than a bit sad, but it's just ridiculous because there's no effort made to address that. I mean, we've got this absolutely farcical situation whereby the cost of, I recently did an analysis on the Woolies and Coles margins, right? Now, if you tally up in percentage terms how much their margins have gone up and then transport that, gone up since the pandemic, and then transport that onto their latest earnings figures, they're earning about an extra $720 million between them. Now, that's a fair chunk of change. And, you know, perhaps there is something there that as to why that is. You know, part of it's, you know, an increase in self-checkouts and then saving money. But I don't know, maybe there's something there. But I just find it a bit absurd that we're talking about an issue of $720 million when rents have gone up by $6.4 billion, or whereby, you know, the cost of housing has gone up by 35 or 40%, and that doesn't rate a mention, even though that's going to end up costing people far, far more than whatever, you know, relatively small additional profit Woolies and Coles are going to eke out of them over the next, you know, whatever the remainder of their life is.
Well, it explains possibly the proliferation of inquiries into the supermarket sector. I think we've got 4 now, last time I counted, right? ACCC being the most recent. So clearly that squeaky wheel has got to the point where politicians think, oh, we need to be doing something, right? But like London buses, right? Or the inquiries come through in groups. I think the last one from the ACCC was 2008. And it's clear to me that the whole supermarket sector is broken. Now, we've got a very small number of players, so competitive forces are pretty weak. They've got massive market power when it comes to the producers. And of course, at the end of the day, households still have to pay because they've got no choice. They have to eat. So it is a very interesting observation. But it's a microcosm of the problem that effectively, until such time as politicians think they get more brownie points by doing something rather than not, nothing gets done, and they finally realise that now's the time to do it. Of course, the ACCC won't report for a year, so we won't know much about it for quite some time. The Senate's looking at it. I think there's a few other inquiries too. But I think the supermarket sector is a fascinating microcosm of the problem.
The thing with Australia is that if you look at a whole bunch of different sectors, you know, small numbers of companies controlling the market is the norm. You know, whether it's banks, whether it's supermarkets, you name it. It's a relatively, you know, we have a relatively limited level of competition in that regard. And if you compare that with a lot of other countries, people come here and they go, well, why is there a Woolworths every 15 feet? Why isn't there more competition? Why isn't there, you know, 14 different supermarkets all competing with each other? And the reality is that that's just Australia. That's just how it works. You know, like, you know, why do we only have, you know, 4 big banks that control the vast majority of mortgages and financial transactions? Because that's the way Australia works, you know. And the reality is that, you know, there's sort of this argument, and it's underpinned a lot of the time by super, where people go, well, if we were to do this, and this would hit the returns of these companies, and it would hit the dividends of the retirees, and it would hit your super. And yeah, and that sort of really just kneecaps the whole thing. I mean, mind you, to be completely frank, that's just Australian politics in general. You know, realistically, there's all these huge issues that we should be talking about, but we spent the last the better part of the last year talking about the voice referendum, which didn't end up getting up anyway. And none of that political oxygen was really used to enact any real permanent and profound change for the Aboriginal community, which is just ridiculous in my opinion. But it's, par for the course, really.
Yeah, well, it shows you, I think, the power of corporates and their ability to be able to call the shots. We've got very small numbers of banks, airlines, telecommunications, supermarkets. Pretty much it goes across the board, right? A small number of large corporates, which means they can, well, not necessarily, precisely follow each other, but they tend to, and their pricing power is huge, which means that they can protect their margins at all costs. And households, of course, are the last person standing when it comes to having to pay, because they have to pay. So that's it. I think this is a really important conversation, because it shows you some of the limitations of the way that the politics currently runs in the country, and the limitations. Now, whether it's capability or whether, as you say, it's just stupidity, I'm not sure. But I have a feeling that part of it's to quote Cameron Murray, it's the game of mates, right? It's where power lays. I come back to the gas price. How come we're paying $12 per kilojoule in Australia, which is the peak global price for gas? You can get gas on the international markets at a lower price, and in fact, the big gas corporations are shipping off more gas from Australia into those international markets, even if China buys it at 10 or 11 and then sells it to Europe at 11.5 to 12. I mean, it's ridiculous. So it shows you the connectivity of corporates and how corporates are effectively calling the shots. Politicians are pretty weak in this context, and frankly, as you say, aren't really thinking about the broader picture, which is about Australia and Australians. Now, I guess we should probably, having spent half an hour ranting, but I think a really important rant, you have put some slides together, so maybe we should just briefly touch on them. And I mentioned earlier on signalling central banks. Well, this was a wonderful chart you put up.
As usual, folks, we have the charts at avocom.substack.com. Any subscribers or contributions will be very, very much appreciated. It helps me keep the lights on and helps me pay the bills while I'm off doing all these other various extracurricular activities. And obviously the charts are always available at avocom.substack.com. And we'll get right into it. Now, this is of what unemployment will look like if we see the same conditions that we saw in the trend report of the latest labour market data, which is still seeing relatively decent jobs growth of, I believe, off the top of my head, was about 17 or 19,000, and labour force growth of about 32,000. So basically, over the course of 2024, we would see unemployment push up towards 5%, well, 4.8% to be more precise. So it's going to be an interesting one in that regard. I mean, just to clarify, this assumes consistent levels of participation. I think it's probably more likely that we'll see participation rates fall, but that's neither here nor there. But I just think it's going to be interesting, because this is really going to make things hard for the RBA if inflation does stay elevated above its target range, which I suspect that it will.
Yeah, and just to underscore, I think is it about 32,000 additional jobs required each month because of the migration, just to stand still.
That was CBA's latest conclusion, about 32,000. Although I will note that in the next 3 months or so, it will probably rise from that, because it has a seasonal rise every year as the international uni students arrive.
Yeah, and the latest numbers I saw on migration were even higher than people were expecting. I think 640,000 was the number I saw.
Yeah, the numbers are pretty out there. Like, I believe that if you can compare the year-to-date numbers for long-term arrivals were about 90,000 higher than this time in FY 2023. The last the prior financial year, and that's not going to be terribly conducive for a whole bunch of other stuff, rents, etc. But I think it's going to be interesting just to see how the student numbers look this year. I mean, obviously they will rise because, well, they'll rise, but we will see some degree of departures later in the year from the expiry of the various pandemic visas. But that'll be right at the tail end of the year. So I think it might be a tale of two halves in that regard in terms of the migration intake. Although at the end of the day, I don't think we're getting close to the MyEFO numbers anyway. I think if we're already 90K above on some metrics, which are admittedly not the same, but do feed into in a broader sense, it's going to be pretty hard to get it down to to 375,000 from over 500,000.
Mm. And the population clock, I think, just ticked over to 27 million, right? Which was, is it something like 19 years ahead of where they thought it was going to be?
I think it was 19 years because I believe it's from the Intergenerational report, and I believe that was for 2043 or something.
Correct, exactly.
Off the top of my head.
Yeah, so we're in a time machine, folks.
Yeah, well, and the problem is we've probably just about got the same level of infrastructure as when those intergenerational reports were made their projections, except we've got an extra probably 4 million people compared with where they thought we'd be.
Yeah, and if you look at that in the context of things like the healthcare sector, in a number of beds and things, it's just not grown relative to the population or the schools or anything. I mean, nothing. There's nothing.
Well, that's the thing, that's why I like, the emergency room data, because it's one of the relatively few things that we have where we can go, okay, this is quantifiably what's happening. This is the number of people who are being seen on time by the government's own guidelines. And since 2013, that's deteriorated rather rapidly. I've shared the graph here before on DFA. And, it's just rather silly that we don't have this conversation with outcome-based, statistics. But, I mean, like we was just saying, you don't ask questions you don't want answers to.
Don't let the truth get in the way of a good story, I always say.
Yeah, pretty much.
Yeah.
Well, we probably should move on to the next slide. Okay, now someone asked me recently after, I believe it was The Economist, put together a graph of real housing prices by G8 countries. And unfortunately, Australia isn't in the G8. So they asked me to put together this one and basically just show where Australia stacks up based on this particular metric, which is real housing prices indexed to Q1 2000. And basically Australia and Canada are in a league of their own.
What a surprise. And I'm fascinated the fact that Canada is higher than Australia, but I always look at Canada as sort of a little bit of a, Australia in a petri dish is Canada. Yeah,
cold Australia, I like to call it. No, and I think I will say it's also worth noting that part of the problem with this chart is that Australian real household incomes, in terms of real household disposable incomes, haven't actually grown since 2013.
Yep.
So that probably tells part of the story as to why things look like this and why it's still very, very hard for Australian households when it appears that it should be harder in Canada. Although getting into that particular comparison is I think we need a whole day.
Probably. Just one quick point, of course, if you look at the growth of debt, private sector debt, mortgage debt in particular, actually Australia holds the prize over Canada.
It does indeed. Canada, I believe Canada's rise from 2000 was greater, but ours was higher earlier.
Correct.
We experienced a larger rise in the 90s than Canada jumped in a little bit later.
Yeah, absolutely. And we're still right up there. Only Switzerland has a higher, but the Swiss economy is rather weird. So I don't necessarily think that Swiss is a good comparison, but relative to New Zealand or the UK or the US or Canada, the amount of debt that we've got is way higher. And of course, with income growth, completely going down, and with the interest rate rises so strong, no surprise that many households are in difficulty.
No, unfortunately. Okay, now one of the biggest factors for the Australian CPI in 2024, or should I say the back half of 2024, is going to be electricity prices.
Yep.
Because all the various subsidies will expire, and then In July, prices will be reset, and wholesale property prices have come down significantly, quite a lot, plummeted, you might say, from where they were. They're still quite elevated compared with some historic periods, but they are a lot lower. However, it's a bit messy because the government subsidies that have been given to households from both a state and federal level have artificially suppressed the cost of power within the CPI. So we end up with this rather interesting question. What is going to happen with what is going to happen with electricity prices come July 1st and come the Q3 CPI? Are we going to see electricity prices come down in nominal terms, or are they going to rise? And one of the biggest contributors to that will be the issue with environmental and network costs, both of which, going by the Australian energy market operators' papers, have seen significant growth in recent years, and as you can see from the graph, that is actually the greater cost for residential power as of this breakdown from the ACCC. So the question is will the upgrading and capex involved in the network push up power prices to the point where they're neutral or maybe even rising a little bit, when the hope is very much for a deflationary impulse from electricity prices later in the year?
Yes, and as I mentioned earlier on, of course, one component is the marginal price of electricity driven off the gas price, which is the international gas price, because, of course, we are very significant exporters of LNG, but the international price is determined, then flows through into the domestic price, which flows through into the price of energy. So that's still very high, and there's no expectation. I think it's going to come down. The forward expectations of energy electricity prices, according to the latest data I show, is they're going to stay high for a long period of time. But then the other point from this chart, and it's really important just to highlight it again, network costs, environmental costs are significant. And of course, part of the problem here is that with the distributed pattern of energy now, with the coal power being turned down, and the battery power alternatives, and the sun power and everything else, the wind power, all of those require a different topology of the network. And so their network is saying, well, we need to invest in this if we're going to be able to actually swallow this alternative flow of power around the place. So there's huge issues here. Meanwhile, I don't believe that we're going to see electricity costs from a household level coming down.
Well, I mean, I think that's really going to be a key factor going forward, because if we don't see them coming down, there's only so many CPI components that could really be deflationary.
Yep.
in a meaningful way, and that's one of them. And I think it's just worth touching on where the deflation in the CPI is coming from. The deflationary impulse is coming from things like household furnishings. It's coming, household goods, appliances, all that sort of stuff. And guess what's going to be the most impacted by increased shipping costs? Big, large, physically large items like couches, like fridges, like appliances, like washing machines, all of which are currently helping drive the disinflation or flat out deflationary impulse of the CPI. So if we do see ongoing issues, with the Red Sea, the Panama Canal, and everything else, then that could really complicate the deflationary impulse in the Aussie CPI. So it's really going to be quite interesting, because I don't think and just to sort of clarify, I'm not seeing, this sort of like COVID-esque, takeoff in, shipping costs that's going to just feed into everything as to the degree that it did in 2021, 2022, with these double-digit rises. I don't really see that happening, except maybe in a few select cases. We'll have to see. But I think that it's, even if we just see a pausing of the deflationary impulse from these various goods, that could really complicate getting things back to 2 to 3%. Now, whether or not that will actually end up mattering, well, we'll see what happens with the unemployment rate.
Absolutely. And just on that CPI, of course, rentals are still very significantly rising. Costs of the construction of new properties, which is also in the CPI, is still quite strong. It's come back a little bit, but a lot of that's to do with the price of materials. Price of materials will likely go up if those international shipping issues continue to rattle around. And then, of course, you've still got labour costs, and labour costs are quite high. Actually, I was talking to someone the other day who's in the construction business, and he's saying he's having to pay a lot more just to get workers because there's a huge demand for those workers to go, for example, and help reconstruct some of the areas that got wrecked with some of the floods and some of the cyclones, as well as all of the work that's going on for the Olympics up in Queensland. So there's a huge contention in terms of building and construction workers. Plus, of course, there's quite a large program of public sector building work as well as private sector building work. So there are some worrying elements here. And, RBA's Bullock said recently that inflation is becoming more and more homegrown. And a lot of these issues are actually because of the policies that were actually played out over the last 2 or 3 years.
Yeah, and I think that's a really good point, because even if we see a relatively sort of benign scenario, I know this sounds rather insane for 10% rental inflation in the CPI to be the benign scenario, but it's possible it could go significantly higher than that.
Yes.
That is the benign scenario put forward by Lowe when he was RBA governor. And if you put that together with, sort of 4 or 5% new home price inflation, which is around about where we're sort of bouncing around at the moment, it's actually bottomed and is now rising again, at least on a monthly CPI level. So take that with a bit of a grain of salt. But you're talking about a potential scenario where 1 to 1.3%, where headline inflation is 1 to 1.3% solely based on those two CPI components. So there really isn't a whole lot left for just normal levels of inflation if we want to get it back to the target band, especially with, I'm not sure if you saw it recently, but there was a really good article in the AFR talking about how much the cost of school fees had gone up.
Yep.
And that feeds directly into the CPI.
Yep, absolutely right. And of course, we're now targeting 2.5% rather than the band, right?
Well, yeah, there is that. I mean, to be completely honest with you, I think it should just be 2% dead. That's just my opinion, because I think that we need to have a target that is more reflective of Australia's ability to generate wages growth, to generate real wages growth. So if the target is 3% and the best wages growth we're going to produce most of the time is 3%, then that's really just a bit of a wash. We need to grow real wages. So the lower inflation is, the easier it is to grow real wages.
Absolutely. But of course, real wages have not grown the last decade.
Well, therein lays the problem. And that's also one of the things that's also complicating, people buying homes and stuff like that, because they haven't kept up with the cost of living.
Correct.
Okay, now this is of the Australia's current 3 largest exports: iron ore, coal, and LNG. Coal is lumped in altogether, both thermal and coking coal. For statistical reasons, it's always been like that with the ABS, but we'll just have to deal with it for today. And basically, I think this just illustrates nicely just what an enormous windfall that we have seen since 2019. We've just seen everything just absolutely go to the moon. We've seen the LNG boom as a result of the war in Ukraine and everything else. And I think it just illustrates nicely just what a commodity-driven economy Australia is. And I'm just going to go to the next slide, because this shows them cumulatively all put together. And not every country in the world, especially with an economy the size of ours, sees their 3 largest exports rise by over $150 billion every day. So I think that, it's all well and good for a lot of people to say, well, Labor has a surplus. And it's like, yes, because $150 billion fell out of the sky. Now, admittedly, that fell out of the sky for the entire country, for the miners and for the LNG exporters, but still that feeds into the federal budget. And I think it's just worth reflecting on this this graph for a second, that if we were to magically see a mean reversion to sort of 2016 prices, which, as anyone who watches commodity markets will tell you, big swings in commodity prices are not uncommon over a long period of time. If we were to see a mean reversion, even if you factor in the additional volumes that have come online in the last 8 years, you're talking about pulling somewhere between 175 and about $200 billion out of the economy. And that's going to give you a nasty trade deficit and probably, not a very nice current account balance either. So, we are really very much a nation supported by commodity revenue in that regard, whether we want to be or not.
And two quick observations. Firstly, the commodity revenue is very strong, but the tax take off that isn't necessarily tracking anywhere close to where that was, partly because of the tax breaks that a lot of these exporters have. And the other is, of course, that the profit that's being generated from those corporations, a lot of that's going offshore. So, in fact, this sort of flatters the economy, right? A lot of it doesn't actually come back and stay inside the Australian economy.
No, well, it depends. I mean, in terms of like the LNG exporters, that is a real, you see the size of the industry relative to the tax take, you'd be like, wow. But that's because, they built up so many losses. There's all the issues with subsidies and tax credits, etc. But in terms of, the mining sector, I believe the total royalties last financial year was something like $60 billion. And that's the mining sector and royalties as a whole. But I mean, $60 billion dropping out of the sky is a pretty nice amount of money, especially when it's more normally sort of 35 or 40.
A lot of that's going to the states, though, not to the federal.
Yes, that's also true. Part of it has come through in forms of increased corporate tax take. But yeah, that's also a factor as well. I just think it's just interesting just from a flows perspective, in the sense that there's all this cash flowing in, but it's not really doing a whole lot, except in a lot of, I mean, obviously there's the profit side of things for the federal government, for the royalties, but the main thing it's doing is supporting our currency.
Absolutely. And of course, if you compare it with Norway, who had a very significant inflow, from the oil cycle, they put a lot of that directly into a fund that actually is supporting their economy now dramatically. We didn't put any of this stuff away when it was all happening. So, we were just thankful for it and, just said, oh, everything's fine because, we've got this huge windfall, but it's just a windfall, isn't it?
Yeah, well, I mean, I'm just going to go to the next slide because that relates to this, and I think it illustrates it nicely because this is these three large exports as a percentage of GDP, which I think in some ways illustrates quite nicely just what an absolutely enormous windfall it's been since 2008. Not every country just magically has up to 10% of GDP flow into their economy over the course of the next 15 years. It's a fairly, sizable windfall. And I think one of the interesting things is that Australia has a rather powerful position in some ways. We are a price taker, don't get me wrong, but Australia also exports more iron ore by sea than every other nation on earth put together. So we do have a degree of power over that. And if we were to, impose some sort of tax or levy that we could have used to save our pennies for the future, that would have been a rather nice little windfall, whether it was on iron ore, whether it was on coal or LNG, when we had a bit more market leverage. All that would have been rather nice, but we didn't. And no. I think that as well, I realize that there has been a fair bit of, benefit to the economy from all this. There has been, hundreds of billions of dollars have flowed into the economy relative to as if status quo had continued. But unfortunately, that's been pissed up against the wall largely. And now we've got an aging population that we have to pay for. And instead of putting the cash away, so we have a nice little sovereign wealth fund to help pay all these additional costs, we don't have jack.
Yeah. Absolutely. And just coming back to the shipping costs, it's just worth just underscoring that, the problems in the Middle East and the problems with the Panama Canal are putting significant pressure on shipping costs, and both in terms of, it's taking longer for boats to go around the place and they're out of position and things. This could have a significant impact as well, both from an import and an export perspective.
It's going to be an interesting one. I mean, I think that there are certain things that are going to be fine, like like generally bulkers, because they're on established routes. LNG is a bit more messy, because Australian LNG cargoes do increasingly head to Europe. So it is going to be an interesting one to watch in that regard.
And by the way, the LNG is really interesting because now the US is overtaken a lot of other producers, right? So they are producing huge amounts of LNG.
Well, there is that. Although I will say one thing that was interesting is that the Biden administration recently halted further progress on new LNG plants. Now, the ones that have already been authorized are going to continue and come online in the next, year, 2 years, 3 years. But the longer pipeline beyond that is now under threat. So that's going to be another interesting one to watch as well.
Yeah, and just another piece of interesting data, there's now, I think, close to 1,000 LNG, these large ships going around the world. They were coming on stream previously at about an extra 2 or 3 per year. Now it's close to 20 per year. So there's a huge volume growth just in the number of ships going around the place. So this LNG thing is quite fascinating to watch, and of course it's created by the problems in Europe and energy there. And by the way, the stocks in Europe are very high at the moment. We had quite a mild winter. So.
It's going to be an interesting one because one day the war in Ukraine is going to end. And provided the infrastructure isn't completely decimated by whatever the remainder of the war is. I mean, I know that there's going to be people who are going to want to take a hard line on Russia, particularly in the US and particularly in parts of Eastern Europe. But then there's going to be other people, particularly the Germans, who are going to want their cheap energy back. So it's going to be really interesting to see what happens with the LNG price over time, if those gas flows are able to eventually resume whenever, we're talking, potentially years down the road.
Yeah, it will be interesting to see. Indeed.
Okay. Now, this is our last chart for the day. And there's been a lot of discussion recently about whether $200,000 income is a lot. And there are a bunch of different answers to that question. In some ways, yes. In terms of it puts you roughly in the 96th percentile for single income earners. It puts a family with 2 adults in even at a $200,000 income between them in about the 86th percentile. So in some ways, yeah, it is a lot. On paper, it's relative to the incomes of others, it is quite a lot of money. Is it a lot when you compare it with a house in Sydney in 2024? No, it's not. Back in 1998, you could, with a $200,000 income of today, adjusted to inflation back into 1998 dollars, you could afford the mortgage on 1.93 Sydney houses based on having a 20% deposit and paying 30% on mortgage servicing. Now, I know some people are going to say, well, you can get a loan for more than that now. Yeah, you can, but you couldn't in 1998. So it's not really an applicable metric to use across time. If I say that, they could have borrowed 38% if they could have borrowed and had a servicing rate of 38% if they were balls deep in debt. But so that's why it's been chosen as a metric that can be used over the whole period of time. And today, you can afford the mortgage repayments on 0.71 median Sydney houses. And I think that this really just speaks to the issue of income inequality and income perceptions here in Australia. Because it's all well and good to say, well, that person earns 200K, they must be loaded, they must have this awesome life. When in actual fact, they can't even go out and buy a median Sydney house. Yeah. Now, I think it's just worth noting that if you went back to that time into 1998, 1999, you could have bought a palatial house on an inflation adjusted income of that size. So I think it's just we've got to this point now where, because of housing, people's lives and people's lifestyles is not necessarily reflective of where they are in terms of their income percentile and where they would sit in when assessed against society and income earners more broadly.
Well, I measure mortgage stress, and I see mortgage stress living not just in the lower socioeconomic groups or first-time buyers, but there are a lot of more affluent households with affluent stress. Now, that's partly because they've got a bigger property and a bigger mortgage. Mortgage rates have gone up dramatically. They may have investment properties, so they might have more wriggle room. But it is quite broadly expanding across different cohorts, not just in Sydney, by the way, as well, but in other places too. So this is a very important observation, and it comes back to a fundamental issue where over the last 20 to 30 years, the price or the cost of a property, so price and cost reflecting mortgage repayments and things like that, have gone up dramatically relative to incomes. And like I said at the top of the show, this isn't a happenstance. This is a set of deliberate policies that have created this problem. And now the question is, what do you go from here? Do you continue to push prices even higher? The high migration supporting prices. Do you allow banks to lend even more? How many more incomes do you want? Is it 3 incomes, right? We're now going to start using as a baseline for measuring affordability. And do we extend the life of the loan even more? I mean, we are coming to the ends of the bounds of things that can be done. But I'm sure they'll find a few other ways. I'm expecting more support for first-time buyers to sort of support the bottom end of the market. I'm expecting the government to throw more money. There's an election coming at some point. We're going to see some things there. But this chart that you showed really does show the stupidity of the whole thing, doesn't it?
Well, I will say one quick question: do you think that we'll see APRA ease serviceability guidelines?
I think there's a chance they will at some point. There's huge industry pressure on them at the moment to do it. Whether they will or whether they won't. But if they're arguing that interest rates are now on the turn and are going to come down, and we've still got financial stability that's looking pretty good, I wouldn't be surprised to see them do something.
Yeah, no, I think they will. I think that they're just. I think the thing is that it'll come when it's the most opportune time, like what we saw back in 2019 when the APRA changes came in, rates were cut, and the Royal Commission was neutered to basically oblivion. So I think we probably will see that down the road. But I just want to make one point just on the chart. Because, some people, because I posted this on Twitter previously, and some people rightly said that a lot of this is driven by monetary policy. And naturally, of course, this is based on the interest rate of the day. I will say that in some ways it actually flatters the present because it's based on actual payable rates from 2019 and not just benchmark discount variable rates. But that's neither here nor there. But one thing I will say is that even if we did see rates cut by sort of, let's call it 2.5%. So a cash rate of 1.85. You're still talking about, at least on this metric, under these circumstances, this prospective household still can't quite afford that house on that income. And I think that really should be ringing some rather serious alarm bells, because people are being told to aspire to, work harder, to get better educated so they can afford those homes. And if these people who among us earn more than 96% of us on an individual basis can't do it, and they can't get a desirable home, and let's be honest, if you're in the top 5% of income earners and you've worked your ass off to get there, you deserve a good home. And if they can't get it, what is the long-term political and social ramifications of that? Is it more brain drain? Is it more people heading overseas so they can have a better quality of life? I mean, I've spoken to people, in that sort of income bracket, people with transferable skills who are heading off to the US or are heading off to Europe, so they can have a quality of life that is consummate with their skills and with their income percentile.
Yeah, I think that's a very, very important point there. And the percentile that you're talking about, we're right up at the top, right? So there's a huge swathe of people with much lower levels of capacity in terms of income, and therefore ability to be able to purchase even a smaller property. And so we are seeing this huge problem, which is a structural problem in Australia. And unfortunately, what often happens is that those with the larger incomes giving more flexibility are precisely the ones who jump ship first, right? Who actually look for greener pastures elsewhere. And what does that say about what's left? We're ending up then with a society where more people are finding it more difficult to house themselves. So that's why we have more people in the rental sector, where more people are having to spend a greater proportion of whatever income they've got just to put a roof over their head, whether it's mortgage repayments or whether it's actually a rent. And what does that say in terms of what people have to spend money on and what they then don't spend money on? And what does it say about the type of society we've got and the type of life experience that we've actually ended up with in Australia? And, I have to say, I think it's broken relative to where it was even 2 decades ago. And that's a problem.
It is. And I think the thing is if we assess this from a very much empirical perspective, and we look at, say, like real household disposable income per capita, which has gone backwards over the last decade and is looking like going backwards further. But let's just use that as our yardstick, right? If real household disposable income per capita has gone backwards, all of the growth in Australia, all of the real growth in Australian consumer spending in terms of, whether it's on services, whether it's on retail, whether it's on other goods, whatever, has been funded by debt. Or it's been funded through some other, whether it's debt, whether it's additional, not even handouts from the government, we add to the income, but yeah, it's mostly driven by debt. So it's driven by, consumer debt, and it's driven by equity, mate. And so it just begs the question, where would we be without it? What if we went through a similar thing like what the US went through? Proportionally speaking, the US never had an equity mate problem this bad, but let's say proportionally, where equity mates falls by over 80%. And all of a sudden, you're pulling, let's call it 70 billion a year out of the economy based on the AFR analysis. Now, admittedly, that analysis is 3 years old now.
Yep.
And unfortunately, I've asked various government agencies for new data, but they won't give it to me. But it just begs the question, where would we be without equity, mate? And the answer is not a very good place. And I think that that's part of the problem here in Australia, because if the equity mate economy was to keel over, that's like 4.5% of GDP.
That's right. Well, I come back to this fundamental definition of the Australian economic situation: houses and holes, right? As we saw, right? It's digging stuff up and shipping it overseas, and it's then relying on this perpetual machine of ever greater debt, driving home prices higher, creating more equity to be able to support the momentum in the economy. It's a very, very narrow basis to lay the foundation for a prosperous future, in my mind. And unfortunately, the politicians don't want to take the hard decisions now, don't want to wake up and smell the roses and actually start thinking about a better future. But that's precisely the conversation we should be having.
No, absolutely. I mean, and it's not like, I'll just have to check some of my notes here, Australia is heavily reliant on China. I mean, everything's going great there, right?
Well, indeed, they've thrown a bit more money on the barbie over the last 24 hours to try and support the Chinese economy.
Yeah, well, I mean, it's ridiculous. I mean, we're literally, if China more aptly, if the Chinese steel sector goes down,
Yeah.
they're taking us with them.
Yeah.
Unfortunately, it's really that simple. And we've been lucky so far because the Chinese government has graciously wanted to maintain its steel capacity for whatever reason, and has spent a whole heap of extra money on infrastructure and on manufacturing subsidies, which has kept the steel mills going, even though the steel mill margins in some cases are deeply negative. So we can thank communist China for our surplus and
Yeah.
for the continued inflows that hold up our currency.
Yes, exactly right. So, well, not a precarious position at all. Everything in the garden is wonderful, and I'm sure the next few months will be, well, same old, because nobody's going to change any policies here, are they?
Well, it's going to be interesting. I have a feeling that eventually Albo is going to be wedged into having to change something, and because he has the smallest electoral majority for a new government since World War II. So, I think that the pressure is really going to be on. But I will say I'm really looking forward to the next election for that reason, because it's going to force him into all sorts of contortionistic shapes to try and keep a hold of majority government.
Absolutely. Double somersault with Pike backwards. I'm looking forward to it. Tarric, thank you very much for taking some time out on the 26th to talk with us. Really appreciate it. And we'll do it again in a couple of weeks. There'll be so much more to talk about. I really appreciate it. And have a good evening.
Yeah, you too, mate. I'm looking forward to our next chat.
Okay, take care. Bye.
Bye, mate.